Hi traders, we'll get underway. Myself, Adam House, Senior Account Manager, presenting the webinar on the Daily European Open for today, Thursday the 30th of the 8th, 2017. Just a short general advice warning before we begin. Forex trading involves trading at risk capital. The following education session is not to be treated as personal advice. Forex City provides general advice only that does not take into account your personal needs or circumstances. Okay, as always, we'll start off with just a little bit of a background search on the economic announcements coming up for tonight. And this is in Australian Eastern Standard Time. We've got tonight at 9 o'clock the Great British Pound Bank of England rate decision, which hasn't changed in a while, from 0.25%, largely as expected. A lot of analysts saying close to 90% certainty of keeping on hold. Very surprising if it increases. Got the asset purchase target of 435 billion and the inflation report. Coming out tomorrow, we've got the at midnight, ticking over on Friday, the ISM Services Non-Manufacturing Composite, which is a bit like an index. Higher than expected numbers on that will probably yield some strength on the US dollar. But very importantly, sort of the major focus for the rest of the week will be on the NFP, the non-farm payroll, and obviously the Canadian dollar with the net change in employment and also the unemployment rate. Now, bear in mind that usually you get a previous announcement. Let's take the change in non-farm payroll, 222k from last month, and then we'll go forward to this month, 180k forecasted. Now, if we get a better than forecasted number from the 180k, if we get 190 or even 200, usually, historically, it's been taken as bullish for the US dollar, seeing as higher number of jobs created. It translates into, broadly speaking, better economic conditions and a more valuable dollar from an investor standpoint. It's all based upon the forecasted, okay? So even if the number comes in, slightly above or even at 190, it was less than the previous month, but it's actually more than forecasted. So that could give investor confidence a bit of a boot, and obviously see the US dollar sort of stem up. But largely an unexpected announcement. You can trade entry orders around this sort of strategy. Sometimes the market will have a lot of volatility around it. It will actually sort of stem both ways. It won't show a clear favourable direction sometimes, but often, last two announcements have seen a steady increase in one direction on an early candle, so we can capitalise on some entry points on those sorts of trades. And we've seen the unemployment rate steadily holding at around about 4.3%. Should be sort of bang on forecast there, so there's no reason to expect otherwise. Heading up to tonight, so let's have a look at the major currencies which we trade. And we only have a look at, if this is your first time to this webinar, we only have a look at the Aussie dollar, the pound and the euro against the US dollar. We have a look at the USD JPY, gold and oil, S&P, ASX 200, and the pound against the yen. We'll go to a daily chart at the moment. So we're on daily charts for most of these. Just go back here. We've got the euro on the daily as well, and the US dollar on the JPY. Sorry, should have changed these beforehand. Pardon me just a moment. Okay, there we go. So we're all on daily time frames here. Okay, so hopefully you can see those clearly enough. And as you'll see, we've got the Aussie dollar up first. Okay, this is a daily chart. We've had some broad selling pressure over the course of this morning during the Asian session, due to trade balance figures coming in with a figure that was very different from expected. It was actually very, sort of hugely off. Exports weren't as high, so therefore the trade balance was, a little bit more negative than forecasted. Those sorts of announcements are usually taken as bearish for the Aussie dollar in general. Obviously, because Australia is such an export-dominant market, we're very heavily reliant on, metals, but, some other materials as well. Very heavily reliant on exports. So if that kind of figure comes in significantly different from the negative, then obviously that's translated into some broad selling pressure on the Aussie. Now, the sentiment at the moment is that we're still in a bit of a decline pattern, as you can see technically here. Judging by stochastics, where we will see a sort of a halt in the market of this buying activity, many traders are looking or setting their eyes at around about the 78.70 level. Even if we have a look at a weekly time frame on the Aussie, you'll see something very compelling there as well. You'll see a top in the market being reached on a weekly time frame. We had this massive succession of a rise pattern over the course of since the 1st of May, sort of at this low point at 73 cents. Hit a top in the market at 80 cents, and slowly but surely it started to realise some selling pressure. Now, this sort of indicator is good for those sorts of pullbacks, overbought, oversold conditions. You could look long term or short term. On the daily, we had a look at 78.70 as a target. But getting into these sorts of trading setups, I mean, if you had have actually capitalised on a sell at this point here at 77.39, you would have ultimately realised around about a 200 pip gain. So it's reasonable to assume that, all factors aside, and especially if we get favourable NFP, that we'll see, that Aussie broadly translating into, some selling pressure continual throughout the market before it hits the bottom and then decides to retrace. The pound has been on pretty steady territory, bit of a rise pattern here over the coming, since it hit the bottom of the market at 1.25 back on the 20th of June. Had a steady rise pattern, pretty good figures coming out of the UK economy. There's a lot of talk about the threat of Brexit, and even though there was some political turmoil around this state, obviously when Theresa May did not win a convincing election, we saw a broad sell-off of the pound. Again, that just demonstrates an overreaction in the market, where we saw sort of a bottom in the market hit, and there's been a slow but surely broad recovery. Now, rates on hold or rates increase usually translates into bullish prospects for the pound. There is a strong channel, emerging here, and we could very well see sort of the pound on continuing strength, sort of, hit highs of even 133 or 133.50, even on that sort of announcement. So even if they're leaving rates on hold, which are expected to tonight, could create some volatility where we see some further upside up to 133.50. Similarly with the euro, very, very consolidated, but, slowly but surely the euro is pushing up against a weaker US dollar. We are seeing some selling pressure coming into, sort of now. These pairs are kind of largely inactive during the Asian session, but around about 4 o'clock or 5 o'clock really with the London Open, which is why we hold this webinar now, we start to see some volatility. Probably going to see a little bit of sort of selling pressure emerge here, but ultimately, with if we get some favourable some favourable US data out tonight, then we could see that sort of broadly sort of sell off a little bit. But the interesting catalyst here is the US dollar, Japanese yen, and if you look historically at the USD index, what you'll see over time is, as we discussed before, there's been a lot of political turmoil and obviously a lot of ineffectual policy making happening on Trump's behalf. We see that broadly speaking with, Obamacare as well. Okay, the fact that it wasn't passed through, or the reform wasn't anyway. So we're seeing that kind of broadly translate into some political risk on the US dollar Japanese yen at the moment. So look, if we do get positive NFP, then, all things being equal, that's usually bullish, and we might see a bit of a recovery of the US, but at the moment it's still on pretty shaky ground. Preference is still to sell on Trading Central. Longer term targets looking around about 109.80 an extension. Gold, the one thing that really sort of confuses traders or investors is that when they see this micro selling pressure happening in the market from this top, that, they run for the hills and they think that the longer term buy trend has discontinued. Now, nothing could be further from the truth, okay? Price doesn't go in a straight line. Obviously, it goes in waves. So we've seen, obviously, a top in the market hit here at 12.74. A little bit of, cooling off to 12.50 or 12.60. But again, gold is a real safe haven instrument. It doesn't really lose its intrinsic value over time. And we could broadly see sort of that, tailing off to 12.61, at which point, we'd hit a low on stochastics, probably having a look at, favourable fundamental conditions to probably propel that further back up to 12.74 in extension. Same with oil as well. Again, we're getting some micro selling pressure happening here, but many traders are going for targets again of 50 in extension or 50.13 in extension as per daily technicals. Very choppy set of conditions on the S&P 200. As you can see, a very, very unusual pattern on the S&P 200, as you can see. Got a lot of, sort of range-bound, consolidated trading conditions happening here. the S&P generally responds well to US data, and the US data has been, on the Wall Street has been pretty positive, but the S&P has been largely sort of undeterred by that, or unimpressed, and for whatever reason it has decided to remain in this consolidated phase. If we see a breakout, of 5792 or to the downside of 5665, then we might be able to see sort of a trend emerging, but it's quite dangerous to trade under these conditions because we're not having a clear directional trend. Is really sort of placing you in a deal of jeopardy if you don't have an idea of, especially using a 50 EMA trend line like this, the blue line on the report. If you're not using that and you're not really sort of being guided by that, it can be quite detrimental. So I'm not telling you to stay away from it, just saying that we're not seeing a clear emergence of a trend just yet, and it might be a little bit difficult to ascertain. Pound against the yen, as we said, economic data recently on the pound has remained relatively strong, with a 0.25% basis increase expected it to continue, which you could see broadly, the pound continuing strength against the yen, probably to tops of 147.52 an extension and 147.80. But, sort of as far as the trading setup goes today, having a look at the broad weakness of probably the Aussie dollar is where the market's focusing at the moment from that top in the market at 80.5. One really compelling viewpoint from this as well. One of them, and look, fundamentals drive the market, but if you were to look at a weekly chart on the Aussie dollar, US dollar, and you use this sort of graph to guide your decision making, what you'll be able to clearly see is that at these tops in the market, when these tops are achieved, it becomes very, very sort of ideal to come into selling in the market. Okay, so we see this happening here and here. In fact, there's rarely a circumstance on the technical indicators here where you actually see, a top in the market that wasn't met with some correction to the downside. Especially here, you see a top in the market being achieved and then some broad selling pressure resuming. And again here as well. All right, so it's all taking into account the longer term and shorter term time frames. A longer term trade setup like this nature on the Aussie, good top in the market for a stop is probably around the 80.50 level. And then, retesting around about the 77.50 level as a take profit on this sort of trading setup. But again, look, it works equally well on a daily time frame too. Don't forget, go to a daily chart. Tops in the market represent good selling opportunities, and bottoms in the market represent good buying opportunities. So we're seeing, it's coming down to the bottom on a daily time frame, but it hasn't quite hit there yet. All right, so under those conditions, you trade the probabilities with the best information that you have that we would expect to see more, selling pressure resume. But bear in mind there is the unexpected NFP announcement. Okay, so keep your eyes watching on the markets at 10:30 on Friday. So for the time being, folks, that's a really quick wrap up of where we're at the moment. If you have any questions about those trading setups or anything else about the market or the report today, please get in contact with myself or your respective account manager. But we look forward to speaking to you soon, and we'll look forward to seeing you at the next European Open webinar tomorrow at 4 p.m. precisely. Thank you very much for your time. Thank you.